Hello traders, today is Monday the 9th of May. It's the FOMC market and YouTrading, and today I'm looking at the week ahead. Okay, just a quick scroll through the economic calendar. We can see there's not a lot of high impact data this week. We have got some out of the US, which includes CPI and PPI. We also have the Opec meetings on Wednesday. So for me, Wednesday is going to be the sort of crucial market focus day, and everything will be either waiting for that to happen or reacting to it when we actually get there. So if we just go to the YouTrading.com for its heat map, we can see that the sort of morning session in London has started risk off. We've got a red bottom left-hand corner, green top right-hand corner. The CAD is sort of bucking the trend in the commodity pairs. So we'll talk about that in a second, but essentially risk off. So we're expecting to see equities continue their down sort of move as we saw from Friday and into the open today. So I'm not expecting equities to bounce at all, just looking for further downside moves. US dollar is the strongest currency, Australian dollar is the weakest, and that comes on the back of Chinese data today. Going to the active trader platform, good looking at the euro versus US dollar, we can see that it had a big monthly down sort of turn in April. May is trying to sort of break through the lows of April, and then if we do, then we've got the swing low from the end of 2016 into 2017 still to contend with. If that goes, then parity is obviously the next sort of level of support potentially, all the way down towards 0.89, 0.9 sort of zone down here where we've got this basing period from early 2000s. Moving over to the dollar index, obviously the euro versus the US dollar is a large component of the US dollar index. So the euro sort of struggling to break the lows from last month. We're actually seeing the US dollar index break above April's high, and it's also trading now above the swing highs from 2017 and 2020. So we're looking for a breakout, retest, continuation. So looking for the US dollar to continue going higher. Obviously the euro versus US dollar, monetary policy divergence between the ECB and the Fed. So looking for weakness in the euro versus strength in the US dollar. And maybe that inflation data that's coming out this week from the US is going to accelerate that, or potentially not. We'll talk about that in a second. Looking at what happened last time in the CPI, we saw that month over month, it rose to 1.2%. So it accelerated, and that helped push yields higher, move out of the bonds and things like that, move out of equities. And we saw the US dollar sort of rising on the back of that 1.2% inflation increase, as everyone expects now the Fed to sort of continue pushing with their hawkish rate hike cycle. So in this morning's data, we had Chinese imports, exports, trade balance data. So if you look here, imports year over year for April came in at 0%, so no sort of change. It was expected that there'd be a drop of 3%. Previously, that was minus 0.1%. So that was slightly better than expectations, if you like. Exports, looking here, 1.9% versus the expected 3.1%. So they're not exporting as much as they thought, and they're definitely nowhere near what was happening in March. So exports from China, obviously that's what they are. They're an exporting nation, not very good. However, trade balance rose to 325 billion. That came under the expectations of 339 billion, but beat the previous reading of 300. So overall, the Australian dollar looks like it's being affected by this Chinese data, and not a lot else. The Bank of Japan has said that they're going to buy unlimited amounts of their JGBs to try and keep their yields in check. So we'll have a look at the dollar versus the yen as well in a second. But going back to the Forex economic calendar, see here that Sentex investor confidence came in worse than expected, also worse than previous readings. So that's weighing on the euro, as is the sort of continued violence in eastern Ukraine and from Russia. So that's what we're looking at the moment. Brexit's also being talked about in the news today. So the pound versus the euro is going to be affected by Brexit negotiations. But yeah, we'll talk about that in the future. Tomorrow, we've got more economic sentiment from the ZEW, probably going to come in as bad, if, well, mixed across the euro and the German sort of readings, but still pretty bad compared to historical sort of readings. So again, probably going to weigh on the euro. Looking further down, we've got lots of FOMC type members speaking. That's going to sort of hold any sort of moves in the US dollar, especially until we get all of their speeches out of the way. And then into Wednesday, the sort of the big sort of focus day for me, the one I sort of want to wait for really. We've got ECB President Lagarde speaking in the morning. So that would be Euro moving if she comes out with something unexpected. Then we have OPEC meetings also throughout the day. So that's going to be probably talking about not increasing production. But again, that will be Canadian dollar and Brent. They're the two that I followed for oil. And then if we look down, we've got the CPI month over month, core CPI month over month, and it's expected to sort of decelerate. So if we just look at the inflation, like I said, 1.2% was the last reading, a big acceleration. And if we could go back to historical prices and rates of change, the blue line, percent change on the left-hand side, month over month, very rarely stays above 1% for very long. So, we might get a spike up to 1% and then a big drop. That's kind of what we're expecting, obviously, in the readings this week, looking to go from above 1% back down towards 0.2, back towards this sort of overall mean average here. On the red line, this is obviously pushing up towards double-digit inflation year over year. So if we do get a drop in the inflation rate back down towards 0.2%, that will hopefully slow the progress of year over year inflation. And maybe not this month do we get a double-digit inflation. If there is a massive drop, obviously, in the inflation sort of change, then currently 81.3% of traders think that the rate that the Fed set last month is going to sort of be pushed up by 50 basis points. But there are almost 20% of sort of market participants thinking there's going to be a 75 basis point rate hike. So these guys were disappointed last time on the day. So we did see moves in the dollar and in the equities based on not getting a 75 basis point rate hike. If the sort of rate of change of inflation is as dramatic and as low as we're expecting, then maybe these guys here move back in towards the 50 basis point rate hike, and then some of these guys move out towards 25 basis point rate hike, which means by the time we get to June, we'll have maybe priced in a slightly lower rate of change, and then maybe the US dollar hasn't advanced as quickly as we were thinking. So that'd be interesting to see what the market reaction is on Wednesday, and then where we stand with this Fed Watch tool. So going to the dollar versus the yen, obviously very sensitive to inflation, dollar, and sort of energy prices. We can see that we're making higher highs and higher lows on a monthly chart. If we go down to an hourly, just looking to continue with the sort of anyone that was short on the FOMC this morning. I wrote that they're sort of trapped short, and they've obviously bailed at this point here. So come the 5th of May, around sort of market close, they got stopped out. We had a retest of the FOMC opening price, and then we're pushing higher. So we're just looking to keep buying the dips. If you go down to, say, a 15-minute chart, you can see here we had a dip down into the moving averages, closed back above, so I went long. That's kind of my strategy for now, just to keep buying dips. So that's dollar versus the yen. Like I said, monetary policy divergence between the likes of the Bank of Japan and the ECB versus the Fed. The Fed are going to keep pushing the dollar higher against the euro and the yen, in my opinion. So that's kind of the way I'm looking to trade it. Another driving force of the US dollar is this dollar versus the Chinese Yuan. We're seeing that the dollar is accelerating a lot higher against the Chinese currency. We're currently 50% of the way back between the highs from 2020 down to the lows of 2022. So we've retraced 50% of that. Obviously, we're in a very sort of controlled sort of channel from late October 2021 into March 2022. Then they couldn't hold it any further, and we just, a bit like holding a ball below the water in the swimming pool. They let go and it just popped up, looking for that to keep accelerating. Now, the Chinese haven't really done any stimulus to sort of weaken their currency. So this to me sort of suggests that there is a shortage of US dollars, and a lot of that might be down towards the sort of drop in exports. So we have to keep an eye on that. But the harder this goes against the Chinese yuan, the more likely the dollar index is also to carry on going higher as a demand for US dollars increases. Now, the pound versus the US dollar, I've marked up a couple of sort of key data points from last week. We had the FOMC here, so we had a big pound rush as the US dollar got sold off. We broke above the liquidity from 29th of April, didn't stay there for very long, came back down, got to the Bank of England the following day, big sell-off. So obviously the sort of magnitude of selling on the hourly chart in the pound versus the US dollar on the back of what happened with the Bank of England, and then hardly anything really from the NFP. So this was NFP. If we get back above the Bank of England sort of highs around 1.255, if we get back above there, then everyone that was short selling the pound is now going to be trapped. And then possibly we could get a retracement higher up towards the 1.3 sort of zone to sort of see if there are any more sellers there, or if there is a maybe potential profit taking from anybody that sort of took a punt on trying to take the stops here from the Bank of England's sort of very dovish outlook for the UK economy. What could keep this lower is obviously Brexit talks. We don't want that to sort of affect the UK economy for much longer, but they are going to be negotiating with the European Union over certain protocols around Northern Ireland. If they just walk away from those sort of talks, the pound is probably going to drop. So we might not actually get back at the Bank of England sort of move here. It's just something to keep an eye on when we get towards the 1.255, should we actually get up there. Moving over to precious metals, obviously as yields and real yields go higher, the sort of non-yielding assets like the gold and precious metals continue to drop. At the moment, I'm thinking dollar strength, obviously strength into the yields. The gold price comes back down towards the 1800 at least, where we sort of traded for quite a long time. Going to a daily chart, looking to the left, this big area here, this sort of trading range from March 21 up to June 21. We traded in the middle of that range for a long time, around $1,800 per ounce. That's where I think the price is going to come back down to, possibly a little bit lower to sort of sweep the lows here, looking for liquidity. And then we'll just sort of work out what's going on in the market then. But currently, momentum to the downside. Sort of fundamentals point towards a continuation to the downside, looking for traders to target, at least for profit taking, any swing lows towards 1800. Another commodity, Brent, broke out of its sort of consolidation sort of triangle, looking for a breakout, retest, continuation to the upside, momentum to the upside. We can see by the moving averages, price action hasn't made a new swing high. So we are actually in between the range from the 11th of April low up to the 18th of April high. We're looking to see what happens within that range. If we can get above this swing high. If we can, then we're targeting the swing high from March 22. The Saudis dropped their sort of prices towards Asia and for oil. So we're expecting maybe oil to come back down on the back of that. If the Saudis aren't increasing the price of oil, then that's a signal that maybe there's not going to be enough demand, and maybe supply will be matched, especially with the US trying to push their product now onto Europe as everyone moves away from the sort of Russian supplies. So looking for maybe a sideways move up until Wednesday in this Brent chart, and then depending on what OPEC sort of say, maybe we get a move. I don't think this is a false breakout. I think this is more of a breakout, retest, continuation sort of scenario where we head up towards 120. But obviously, I'm not going to trade anything yet until we get like a past Wednesday's OPEC meetings. This is the S&P 500 benchmark index. Obviously, lots of money managers have to beat the sort of returns on the S&P 500. And at the moment, S&P 500 is now making new lows. We've made this high here, couldn't get back above the swing high from 28th of April, now taking out the low from the 2nd of May. Looking to the left, we're going to try and take this swing low here, I'm sure, from the 13th of May 2021, and then we've just got all of these other swing lows here to sort of target. So at the moment, S&P 500 is looking in a down sort of trend. If I was to put a fib extension tool up, we can go from the sort of swing high down to the low, back up to the next swing high. 1.618% retracement takes us all the way down to 3,500. If we look to the left, that is also a sort of market structure sort of target down here. So we could be coming down a lot lower. And in terms of what that is in the sort of larger scheme of things, if I was to put a fib tool up here and then take it up to there, if we're targeting 3,500 around here, that would be halfway back between the March 2020 lows and the 2022 highs. So that's kind of what I'm looking at this week. I think a lot of this changes on Wednesday, depending on what the market thinks inflation expectations are in the future. And yeah, I'll catch you again tomorrow.